So I just came back from a short trip to Mysore. It was a family trip, but it's been a long time since I have made videos. After that positional stock trading series, I decided to take some break. I had prepared all the videos and I had scheduled all of them so that they would release once every weekday. Then I took a break from making videos. Now I am back. So I need to get back the energy that I put into the positional stock trading video series. In this video, I want to address a question, a very interesting question asked by one of my YouTube subscribers. He said that on a weekly chart, you look for three consecutive candles where the high of these three candles is below the high of the previous candle. That is when you mention that the base formation begins. When this candle closes finally, that is when we have confirmation that the base has begun on the weekly time frame chart. But on the daily time frame chart, we look for only 10 candles in the base. So 10 candles means 2 weeks, because in 1 week there are 5 candles on the daily time frame chart. So this YouTube subscriber, he wanted to know, why is it that on a weekly chart we look at 3 weeks of consolidation, and why is it that on a daily time frame chart we only look at 2 weeks of consolidation? Okay, so I wanted to address that question uh, with 2 3 examples, and all the charts that I am going to use in this video are very old charts. So as per the SEBI regulations, we are allowed to use old charts. So I will show you one weekly chart, which is what you see here, which is HDFC Asset Management Company. And I will show you a couple of more charts, daily time frame charts. Okay. So first things first, on the daily time frame chart, we look for minimum 10 candles in the base to confirm that the base is complete and we can now take the trade. 10 candles is the minimum criteria. Okay. In weekly, we need 3 bars where the high is below the high of the previous bar. That is when this candle closes, the base formation begins. Okay. Now 3 weekly bars means 15 candles on the daily time frame chart. Now the question, I wanted to address that question. See, I am not saying that you should not buy a stock which has less than 10 candles in the base on the daily time frame chart. Let me repeat that. I am not saying that you should not buy a stock which has got less than 10 candles in the base in the daily time frame chart. All I am saying is that if you buy a stock which does not even have 10 candles in the base on the daily time frame chart, you are taking too much risk. The stock has not taken enough time to consolidate. Okay, let's look at an example. So have a look at this. This is GRSC old time frame, old chart. So we can use this. So after this, let's start counting the number of candles inside the base. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So if I wait for 15 candles to complete on the daily time frame chart, I will miss this breakout. So how many uh, points are there in the base? There are 6 points in the base. See, this is point 1. That's point 2. This is a daily time frame chart. Point 3, point 4, point 5, point 6. This is a daily time frame chart of GRSC. Okay, there are 6 points inside the base, right? And the high of this becomes your point number 5, becomes your buy point, which is 1386.45. So 1386 point, and let me give it yellow color. See, now after point 2 inside the base, there is not a single candle which has closed inside the green zone. So this is a risky trade. You are buying from the blue zone. But just because it is a risky trade doesn't mean that you ignore the stock. All you need to understand is there is risk involved in this kind of a trade. Just because there is a risk involved does not mean that the stock cannot go up. You want to see the movement in this stock? Have a look at this. I will move the price forward. Have a look at this breakout. Okay, the stock shot up like, let's measure the distance from this yellow line till here. It's 101%, more than 101%, so 105%. The stock doubled in a matter of, see, 14th of June till 9th of July. So roughly 3 weeks. The stock doubled in 3 weeks. So if I go back to this base, now you tell me, if I wait for 15 candles, will I not miss this stock? Okay. So there are there are 3 bars on the week. We wait for 3 bars on the week, right? 3 weekly bars means 15 daily bars. So here you see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12. If I wait for 3 more candles on this base, I will miss that 100% move. Correct? And this is a stage 2 stock. See, blue, green, red. The price is above the 50-day. The 50-day is above the 150-day, and the 150-day is above the 200-day simple moving average. In spite of the fact that this stock does not have any green zone closings, okay, in spite of the fact that there is risk inside the base, in spite of the fact that there are no 15 candles in this base, the stock shot up 100% in 3 weeks. So, and I have seen this over and over again. Sometimes a stock does not take too much time to consolidate, but you need some discipline, you need some rules in your trading system. That is why I said to myself, 15 is too much and less than 10 is too little. Let me repeat that. Waiting for 15 candles on the daily time frame chart is sometimes too much because you might miss this kind of an opportunity. And waiting and less than 10 candles is too less of a time for a stock to consolidate. So below 10 is too less and above 10 is like too much, giving the stock too much time. So 10 I think is the optimum number, which I found out because I have looked at thousands of charts on a daily basis. I am scanning almost on an average 100 stocks. Daily I am looking at 100 stocks. If I'm looking at 100 stocks daily, obviously I'm looking at 500 stocks weekly. That is 2000 stocks in a month. That is 24,000 stocks in a year, correct? So I am looking at 24,000 stocks in a year. When I have looked at 24,000 stocks, I realized that 10 is the optimum number. You need to have minimum 10 candles in the base for a reasonable trading opportunity. Let me show you one more example. Have a look at this. After this, you start counting 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4. There are 14 candles. So less than 15 candles inside this base. Blue, green, red. Okay. See, and the distance between current closing price and point number 3 is almost 10%. It's not even less than 5%. So in spite of the fact that this base has got less than 15 candles, in spite of the fact that there is risk inside the base because the distance between the closing price and the buy point is more than 5%, in spite of the fact that there is risk involved inside this base, look what happens. The stock breaks out, right? In spite of all the risk parameters, see from here, your yellow line is here. It shot up 60% in like less than 2 weeks, correct? Stock went up 60% in less than 2 weeks. So if you wait for 15 candles to complete, you will miss that opportunity. That is why you have to look at bases which have less than 15 candles or and more than 10 candles. That short base is a very good trading opportunity. Apart from that, you also need to look at volume. The volume inside the base should contract. So, to answer the question directly, if you wait for 15 candles in the base on the daily time frame chart, you might miss these kind of opportunities. Here, the high of this candle, there are 4 points inside this base. This base is very risky, by the way. One, two, three. Sorry, there are 6 points inside the base. Four, five, six. There are 6 points inside the base. So from here, yeah, there is an opportunity here to buy. What's the low of this? 191.20. What's the low of this? 191.1. So yeah, you have an opportunity to trade here. So the high of this becomes point number 5, 199.80. 199.80. So the high of this candle becomes point number 5 inside the base and which can be traded. See, that's the breakout, correct? Let me go back to this. So the argument that I'm making here is on the daily time frame chart, 10 candles is the minimum that we need. Okay, if it is less than 15, it is fine. I just showed you two examples where one stock shot up 100% in about 3 weeks, another stock shot up 60% in less than 2 weeks. Okay, so we cannot miss those opportunities. That is why I do not wait for 15 candles to complete. Now, coming back to the weekly time frame chart. Now, why do we wait for minimum 3 bars? Because I have noticed after looking at thousands of weekly time frame charts, like 24,000 weekly time frame charts, I have realized that for a stock to form a base on the weekly time frame chart, you need minimum for a proper base count on the weekly time frame chart, you need minimum 3 weeks of consolidation. Okay. So for example, have a look at this. After this, there are 2 bars which are consecutively below the high of this. The high of these 2 bars is below the high of this bar. Correct? So the high of this bar is 1738. The high of this bar is 1672. The high of this bar is 1636. You can clearly visually see the high is below the high of these bars, right? But look at this bar. It already breached the high of this bar. So that base is not complete. Okay. The stock it still continues to be in an uptrend. It still continues to be in a move above the 10-week simple moving average. So after looking at thousands of weekly charts, I realized that for a proper base count, because base counting is done on the weekly time frame chart, base counting is not done on the daily time frame chart. Okay. For a proper base count, we need minimum 3 weeks of consolidation. This is experimental evidence. This is empirical evidence. The entire William O'Neill and Mark Minervini system is based on studying past leaders, past leading stocks. They did not start with a strategy and then backtested the strategy. No, they did reverse factor modeling. They took leaders and they studied the characteristics of leaders, which is exactly what I am doing here. After looking at thousands of charts, I have realized that if I am taking a trade on the weekly time frame chart, we need minimum 3 weeks of consolidation. If I am taking a trade on the daily time frame chart, we need minimum 10 candles. On a daily time frame chart, if you feel that you are taking risk, you can keep a tighter stop loss compared to that of a weekly time frame chart. So that is a question which I wanted to answer. By the way, if this is a stock that I have used in the positional stock trading series, I have used this example. This was the breakout. I have drawn the green zone also here. And we have discussed this breakout in detail. Okay. So remember some basic ground rules. Okay. Bar chart means weekly time frame chart. Candle chart means daily time frame chart. You can take a swing trade and a positional trade on the daily time frame chart, but on the weekly, you are not allowed to take a swing trade as per this system. On a weekly means positional. Remember, weekly means positional. Weekly means bar chart. Daily means candle chart. Daily means you can take a swing trade and a positional trade. Remember, these are basic ground rules. What is the difference between swing and positional? Well, any stock that meets 7 out of 12 of our fundamental criteria, that's a positional trade. Any stock that does not meet at least 7 out of our 12 fundamental criteria, that's by default a swing trade. So for that stock, you don't look at the weekly chart, you only look at the daily time frame chart. For example, if a stock meets only 5 out of 12 of your criteria, fundamental criteria, then you don't look at the weekly chart. You directly go to the daily time frame chart. You look at the weekly only for the base count, because base counting is done only on the weekly time frame chart. Forget about the monthly. You don't need to look at the monthly. Monthly is too long of a time frame to trade. So I hope I was able to address the question. In this video, I have showed you one example of a weekly time frame chart and a couple of examples of the daily time frame chart. If you are feeling confused between the weekly and the daily, I would suggest that you stick to one time frame, right? I would suggest that you stick to the daily time frame, because there you can take swing and positional. If you are a conservative trader, I would suggest you only stick to the weekly time frame. Forget about the daily, intraday, monthly. Only stick to the weekly time frame chart and only take positional trades. Okay. So depending on your personality, depending on your temperament, if you have a lot of patience, stick to positional trading on weekly time frame charts. If you are an impatient person, there's nothing wrong with being impatient. You can stick to daily time frame chart. You can take a swing trade and a positional trade on a daily time frame chart. Then don't look at the weekly. And if you're someone like me who has got some experience in the market, you can handle daily and weekly time frames both. Then you can look at both the time frames for a single stock, and you can see on which time frame is suitable to take a trade. I would prefer this hybrid approach, where when I look at a stock, I'm looking at the weekly and the daily. My priority is to buy the stock on the daily time frame chart, because there you get an early entry, even if it's a positional trade, right? But base counting is strictly to be done on the weekly time frame chart. Okay. So I hope I was able to answer this question properly. I hope I was able to give correct examples to illustrate my point. I encourage all of you to send me intelligent questions like this, like this. Don't ask me basic questions, because the basic questions I've already covered in a lot of videos. In the description of this video, you will find a lot of links where I cover the basics. So please send me some advanced questions so that I can do a detailed discussion in a video, so that your knowledge goes to the next level. Don't stay at the basics. You can't remain in first standard in school for infinite period of time. From first standard you have to go to second standard. From second standard you have to go to the third standard, and so on. So get the basics cleared, watch all the basic videos on this channel, then come up with some intelligent questions. Send me those questions by email. You will find my email somewhere on the channel. I have put it somewhere. I don't remember where it is, but you will find it. Send me an email. I normally reply with a voice message. If I find the question worthy enough, I will make a video and post it on the channel. Okay. So my videos from here on will be based on the questions that you are asking me. Okay. Thank you so much.